Last week, the House approved President Biden's $1.9 trillion stimulus package. The stimulus bill now heads to the Senate, where it is currently being debated. A tiny provision in this latest stimulus bill could provide a big benefit to student loan borrowers. The legislation has numerous initiatives to provide financial assistance to broad sectors of the American economy, including $1,400 in direct payments, extended unemployment benefits, housing and nutritional assistance, a new expanded child tax credit, funding for vaccine distribution, and economic aid to state and local governments. But tucked away in the vast text of the bill is a provision that could provide significant relief to student loan borrowers, and could also pave the way for further relief in the future. This provision would essentially exempt all student loan forgiveness from taxation through the end of 2025. By way of background, student loan debt cancellation, including partial cancellation, can be treated as taxable income to the borrower by federal and state taxing authorities. In other words, the debtor or borrower may have to pay income taxes on the balance of the cancelled debt, as if they earned it in income. Borrowers in these situations still often come out ahead in that they would pay significantly less overall by getting their debt cancelled than they otherwise would through its full repayment, even with the tax bill. But because the cancelled debt can be a taxable event, borrowers could owe substantial taxes, which would be due all at once. And if the borrower doesn't pay immediately by the tax deadline, there can be penalties. As an example, take a student loan borrower with $60,000 in outstanding debt. Let's say $40,000 of that debt gets cancelled or waived. If that $40,000 gets taxed as income, the actual tax cost to the borrower would depend on several factors, including the tax bracket that the borrower falls into, and whether there is a state income tax. But assuming an overall effective tax rate of 30%, the borrower in this example may have to pay $12,000 in income taxes. This is, of course, less expensive than paying off the $40,000 balance in full, particularly if it would have been paid in installments over time with interest. But coming up with $12,000 all at once could be difficult or impossible for some student loan borrowers. The IRS does have exemptions that allow borrowers in certain situations to avoid any tax liability on cancelled debt. For example, there is an exemption for borrowers who get their student loans forgiven through public service loan forgiveness and other profession-based student loan forgiveness programs, and for borrowers who obtain student loan forgiveness due to a disability. Borrowers can also claim insolvency if the total debts exceed the total assets at the time that a debt is cancelled. This often requires that borrowers complete additional paperwork with their tax return.